Okay, good morning, everybody. This is Rich Dad reporting live from it at 10:24 a.m. EST time. So right now we are looking at the S&P chart, and what we are trying to do is simply decide when we are going to enter a trade, and when we are going to get out of it. So like I said, it's Monday morning. It is Easter Monday, so there's not a lot of volume in the market. Um, The only thing that I have on my screen on my chart right now is each cloud. Those orange dots are the P stock and down here is our relative index. It lets us know the overbought and oversold conditions of the market. So right now we're 1 minute chart. Okay. And as you guys can see, this red line and the blue line, which are the base and conversions lines, they are pretty close together. And in the Ichimoku, we want them going in the same direction with a little space between them, but not touching. However, when we see a cross, you guys see where my finger is? When we see a cross right here, that usually means the trend is reversing. And you guys can see that the price action is below the red clouds, and the SARs, the stop and reversal dots, are above price action, which symbolizes a downtrend. Let's go to the RSI, and conditions are headed towards being oversold. Once we reach below 30% here in the RSI, the market is officially oversold, which signals a reversal because once it becomes oversold, the bulls usually start buying. Okay, but this is just a 1 minute chart. Let's transition to the 5. We are waiting to catch up with us. Okay, we are in the 5 minute chart now. 5 minute chart is almost looking the same way as the 1 minute chart. Price is below the green cloud here. Now the cloud on the 5 minute chart is green still. The base and conversion lines have also come below the cloud. The SAR dots are below the cloud, as well as our lagging span. The green line on the Ichimoku cloud is called our lagging span. And when we place a trade, we want that green line to be in the same place that the candlesticks are. Okay, we don't want that green line to be touching any conversion lines or baselines. We don't want the green line to be touching any clouds, the Kumo here, nor do we want the green line to be touching any candlesticks. The green line appears to be where it's supposed to be. However, we still wouldn't put in a sale because if we go to our RSI, it's at 34%. So that's appearing to be a little oversold, and hence why this last candlestick is probably green. Let's just skip to the 1 hour chart. Now, where the overall trend is, okay? So, our 1 hour chart says the opposite of what the 1 minute and 5 minute chart says. So, if you guys notice, price action, i.e., the candlesticks, are above the Kumo clouds, okay, on the 1 hour chart. So, already, I'm sorry, I'm trying to move forward. Okay. And the cloud ahead is already green. So that lets us know that it's probably going to be bullish in the future. However, we're seeing a lot of sideways action. Okay, our green and our blue and red lines, the conversion, the baseline, are basically neck and neck. Okay, basically neck and neck. We see what price is doing here. It's moving sideways. This is not a good time to get in the trend. And you say, oh, Rich Dad, well, when is a good time to get in a trend? when we see a breakthrough in this consolidation. Okay, so we either want, now if you guys notice, price action is above the cloud, but the dots, the stop and reversal, are also above the candlesticks. And when the stop and reversal are above the candlesticks, it means that the candlesticks are going to go down, bearish. Okay, so right now we have a lot of consolidation. We don't know where price is going to go. It's in the middle of the RSI. We're at about 45%. This thing could go either way, up or down. Okay, so what we will wait on in order to place a trade is one or two things. One, for price to break through this Kumo cloud here. Okay, we want price to break through this Kumo cloud, and then we want our base and conversion lines to show us a strong trend, a strong trend. Okay, and our lagging span, that green line that you can barely see right now, that also has to be far away from the candlesticks and the price action. Okay, if the lagging span is touching the candlesticks, it usually represents a weak trend or sideways price action. So we do not want to get in a trade. Let's look at the 4-hour chart. And the 4-hour chart shows a much stronger uptrend than the time frames prior. Okay, so if you were looking for a good swing trade to get into, okay, this 4-hour chart would have you a bit more confident to put in a buy, okay, to go long, because do you see where our baseline and conversion lines are? Okay, they're not touching, they're not crossing, they're pretty much moving in the same direction, but it's not it's not the strongest uptrend. I still wouldn't get in it, but this is a bit more secure if you were looking to go long. The lagging span is not touching price action or candlesticks anywhere. Okay, um, everything is above the cloud, from our conversion and baselines to the lagging span to the candlesticks themselves, and our stop and reversal dots, our star dots. I just want to show you guys what it looks like when you go look for settings. When you're in settings in Traders View, it's called the SAR, and just leave it set to the default parameters. Okay, so the stop and reversal dots are below the candlesticks, which usually means that price is going up. All right, it's going long, and our RSI is still in the middle. So when RSI is between 60 and 40, okay, um, the trend is usually continuing. So let's go to the 1-day chart. Wait a minute. Before we move on, I just want to say, due to our lack of confirmation in the 1-hour chart, okay, we still wouldn't put in a buy. Just because the 4-hour is showing us this, we still wouldn't put in a buy. We would wait to put in a buy trade or go long for confirmation in times. So we would wait for all of our charts to be lining up, okay, in the same accord. So if you guys remember, in the 4-hour chart, looked totally different. Price was above the Kumo cloud. All right, price was above the Kumo cloud. That's future price action. Don't pay attention to that sideways stuff. All right, price was above the Kumo cloud. So was the lagging span. So were the conversion and baseline, which are basically our moving averages. The red and blue line in the Ichimoku, those basically serve as your moving averages. Okay. So we need for all time frames to be on one accordance in order for us to put in a trade. And once all time frames are on one accordance from the 4 hour to the 5 minute, okay, then we are confident that our trade is going to go in the direction that we want it to go in. Okay? So, like I said, let's just end the 5 minute. I'm sorry, I'm going to stop recording because my screen has officially stopped. When my screen stops, I don't know if my audio stops as well. So I would definitely like for somebody to comment and let me know if there were any like breaks in my commentary so that I can approve that in the future. Okay, so excuse me. Like I said, guys, um, our 5 minute and 4 hour chart is telling us something totally different. Okay, as you guys can see, price is pretty bearish in the 5 minute time frame. All right, and when we went to the 4 hour time frame, price looked like it was going to be bullish. All right, so what we're going to do is wait for confirmation on all time frames. All right, so let's just go back to 1 hour chart, and the 1 hour from the okay, again, so 1 hour is still above price action. The 1 hour is still in a sideways bullish trend, for back of letter words. Um, yeah, so as of right now, guys, we are not receiving any confirmation. Um, if you guys know the confirmation that we are looking for, let me know. And we will come back in about an hour or so to see if we've gotten anywhere further with the trends, or if the market has made any type of move or increased in its volatility for us to be confident in putting on in setting a winning trade. So I hope this was helpful. And like I said, guys, this cloud, this Ichimoku, it's a whole trading system within itself. So this lets us know when, also when not to get in a trade, not just when to trade, but when not to get in a trade. Okay. So we don't want to set a trade and price action is consolidating and moving sideways all day, and then tomorrow when the market opens, it breaks out, okay, and spikes in our in our opposite direction. That's bad. We don't want that to happen. So we'll just be patient, okay? Because, you know, the name of the game is waiting. And from there, we'll wait on the right setup and execute properly. I hope you guys were able to learn something from this.